You're on mute, Shy.
What a great start to the to the live stream, guys.
No, you're
Well, I
good.
was saying, ladies and gentlemen, welcome to the latest and greatest live stream of Investing the Boys. You got myself, Shai Baloa. We got Logical Thesis. Funny, we were just trying to. We're going to be making this much more of a YouTube thing, so we were trying to orchestrate that in the back end. Most likely, it's going to be starting next week. It's going to be on YouTube, so look for the Investing with Boys channel. But as we were speaking, QQQ is down 1.5%. Logical was making a thesis on I wouldn't be surprised if we hit green, and I was like 0 DTEs, and look at that. Now it caught a bid in the last like 10 minutes. I don't really know what caused that bid. Maybe it's the liquidity is super thin. I don't know that we'll get into the Oracle earnings review, the Adobe earnings review. I think there's a lot of AI data center FUD that's a bit causing this pullback in a lot of the bigger names, but we'll get into that later. How are you doing, Logical?
Yeah, I mean, I think I have a comment for you why I think this goes green. And look, Oracle, it's a shame, but it's basically part of that segment of the market where it's been weak. I mean, the neo cloud names have been weak. Like this kind of part of like the data center expansion have been weak, but it hasn't been necessarily the driver of the stock market. If you look at, there's been a bifurcation in the market. You look at things that have bounced hard, and then you look at things that have bounced soft, and it's okay. The market has shown you that it can go up anyway. I mean, we basically retested the highs yesterday, almost on the S&P, on a very dovish Fed, in my opinion. You got a new all-time high on IWM. You got a new all-time high on RSP last week and almost yesterday. I'm not sure if it actually hit, but the market's telling you that the market still works, even if some of what's been the leading strong sectors take a breather. So, does this Oracle news like really throw off the bull market? No, I don't think so. If anything, it's probably healthy to see rotation amid the bull market. So, you know, why do I think the market bounces? Because Oracle doesn't run this market. There's a lot more that runs this market, and it's okay for things to take a breather. And the Fed was dovish. They're doing QE. I don't care what they call it. It is QE. They're buying $40 billion of treasuries a month. Are you kidding me? Literally, first of this month, they're like, we're going to stop QT. And then they come out less than 10 days later saying, we're doing QE. they reduce their balance sheet just to expand it again. That brings liquidity to the market. They're buying bonds. I mean, what's not to like? IWM does not make an emphatic all-time high like that just because. That does not happen. Market loved what Jay Powell said. Jay Powell runs this market, or I should say the Fed chair. Oracle, take a seat, bud. Doesn't matter. Let's go.
well, I also think that people always love correlating like a company specific thing to something that's wider scoped. And I think what's happening with Oracle specifically is an Oracle problem. And it's like not something necessarily bad. Like it's just risky, but people are now associating AI data centers as risky all of a sudden when maybe it was more of a safe haven. I also do believe that we have gotten just looking at the price action the past couple of weeks and also the commentary on yesterday's Oracle earnings. I think the economics of the AI data center build out is going to become much a bigger weight in which names catch a bid next year. So I think before, honestly, 6 months ago, I think RPO numbers would have actually been a catalyst for stocks. I think same with like pipeline numbers, the Microsoft and NBIS deal, the IREN and all these
Well,
hyperscaler
dude,
deals.
so you're absolutely right, though, right? What happened to Oracle on that last earnings? It was up 30% as like a $600
No,
billion
it's
mega cap.
it's
You're
it's a
absolutely right.
it's a character change, and I think it's a permanent one. So I think that again, it's very healthy. This is what you want because it prevents bubbles. And I think a lot of people just maybe got ahead of themselves of like, oh, it's the deals are coming, like they're going to fulfill that demand eventually. I think a lot of people are forgetting about maybe opportunity costs, maybe on the balance sheet scrutiny that's going to be taken in the near term to fulfill the long term. Like I made a you can call it a funny analogy, but like I was trying to explain. I always practice on my wife on like what's happening because it helps me essentially create a narrative that can like be more understood because My feedback has been I'm too technical. Whenever I go on TV, I need to not dumbify it a bit, but like maybe make it more wide scale. But what's happening right now on Oracle specifically is you have a 13-year-old son, and they are growing significantly. You know, like if you have children like around middle school, early high school, like it's pretty insane how much they grow. So right now, Oracle is kind of entering that phase a bit. Like they're a teenager in the growth spurt, buying clothes that are 2 sizes too big. They know that they will be able to fit in this clothes once they're junior, senior in high school. But when you buy those clothes in the middle school, it's going to feel a little awkward in the immediate. It's going to be exactly what they need down the line because they know they're about to grow into something much bigger. However, right now, it looks like it's over. It's a clothes that's way too over. It looks way too big for what your body is right now. That's essentially what is happening at Oracle. So I think that Oracle is going to be just fine, but people might have participated. They're a $1 trillion company, and that's the issue on timing. That's why entries are so important. Like I really do believe Oracle is going to make it. I think OCI is going to have a seat at the table. Eventually, OCI is going to be able to monetize all that RPO that's sitting in their pipeline. And then the current valuation right now will actually seem far too low relative to the scale of the asset that Oracle is trying to build. However, the tension in the immediate in that cost structure is going to be substantial. Just off yesterday's print, I mean, cloud expenses grew 45%. That outpaced the cloud revenue growth and compressed margins in a way that confirms what you've been hearing the past from all the bears, that hyperscalers are not going to let Oracle take AI inference workloads on superior economics. And what I mean by that is they're not buddies like Azure, AWS, Google Cloud. Like they're not just let OCI, like, I'm bored of competing with these hyperscalers. Like, come join the party. Like, we want a new personality. No, they're not that way at all. They're hyper competitive. Capitalism is brutal. So they don't want a new competitor in OCI. So they're not going to let this new hyperscaler join the party without a fight. So I think right now that's what's happening. Oracle is sacrificing a ton of margins in order to get a seat at the table. I do believe it's going to bear fruit in the long term, mainly because the demand for AI is substantial. It is insatiable and it's going to continue, but doesn't mean it's the best investment right now. And that is the biggest, like, that's where you have to kind of think about this investment where like if you're a 5+ year investor, get into Oracle in the 150s to 180s, I really do believe you're going to outperform the market in the long term. Like I'm talking 5+ years out. Because when OCI becomes 75% of the revenue, substantial, we're completely different than the database business. And their database business is still going to exist. Like they're a legacy database player that's very sticky. But in order to get that OCI business to become an over-index in their revenue stream, it's going to be a lot of brute force, and it's going to be a lot of compute constraint issues that they're going to have to get through. And there might be some opportunity costs. Having said that, where do you want to enter? Now we're entering 2026. Like, where do you want to put your capital in? And but what Logical has been saying as well is like breadth's widened. There's opportunities elsewhere that's not AI data centers. Like, yes, that might exist. I mean, that might be the place to be long-term thematic investing, but why do you have to participate right now? Like Amazon's a perfect example. Like I'm hyper bullish, top position. Logical dumped it 6 months ago, a year ago, whatever it might. I think it was 6 months ago. He outperformed his out.
I don't want to tell you something.
You dumped it again?
Yeah.
I don't blame. It's an opportunity cost. It's a very different kind of investor. Yeah.
I love Amazon here. I think it's one of the best large cap names in the market. I don't want that to get misconstrued. I just didn't want you to say that.
No, but it's a perfect example because you use that working soldiers, your capital elsewhere, provide some alpha, and guess what? You had this opportunity to get back in Amazon at the same exact price you dumped it 6 months ago.
100%.
That's what's I think maybe going to probably happen with Oracle. I also think that's a lot of these AI went up already. Like you have to ask yourself what's the upward surprise that's going to cause another bid for them. That's the biggest tell. Like Broadcom today, like the bar is extremely high. What are they going to have to communicate to catch another leg in their rally? It's going to be substantial. but yeah, I still think that Oracle was it wasn't it wasn't catastrophic. I think a lot of people are assuming their earnings was catastrophic and red flag. I just don't see that. Did you dig into the earnings at all for
No,
Oracle?
I don't pay too much attention to the specifics of these numbers, but I just pay attention to how markets react and what's important in the market. And I wanted to say something, because clearly it dragged down the market today, and it's every single other day. You know how tiring this is. AI is dead. AI is back. AI is dead. AI is back. It's like, dude, it's here. It's here to stay. Like, who cares, about all these like nuances and like, oh, is, the credit default swap's going to come? It's like, dude, they went from, they spiked 15% from like 0.9 to 1.2% or whatever it was. It's like, come on. Nothing's happening right now for Oracle. Maybe there's some other players who are going to hold the bag, but I think that's the bigger story at this point is like, is it sustainable? And is that why, credit default swaps are, rising? Basically, that means the insurance on their debt, like meeting their debt obligations. So if you're a debt holder, you could buy some credit default swaps to like insure against the debt that you hold. I just want to say something real quick, right? Like, before we got on the stream, I was basically saying, I think we finished green today. Now, I don't know where we're. Let me see where the market's at. Give me a second. I got this new iOS update, and it's just so annoying. Okay, so look at that. Oh my goodness! I wish we were live when I said that at the bottom. I said, markets finished green today, and SPY's headed for green close. And let me tell you something. RSP up 62 bips on the day, 52 bips on the day. XBI up 1% today. I mean, it's a strong market.
It was a company specific issue yesterday. It's just Oracle over leveraging themselves. That's really all it was. But the market just read it as broader index.
Yeah. No, it's totally fine, is what I'm trying to say. It's like everyone wants to freak out at every jitter. It's like, dude, you just got the most accommodative Fed before like Trump's like lackey goes into, effect and just gets to cut rates. He literally, Trump's quote yesterday was, "We should have the lowest rates in the world. We should have negative rates."
No, it's
so I mean, it's you're worried
the
about a build out.
administration is very bullish.
Yeah, you're talking about a build out of the AI data center. What's going to happen when interest rates go to free goal? Then you get a bubble. Then you get over allocation of assets. But until that moment, I don't see it. Sorry, I just wanted to say something. Look, you know what helps me stay bullish in markets? I think it's really worth it for most people who are active in the markets to subscribe to some sort of options flow, like service or something like that. I think it's a good thing because you see what people are actually doing. Forget what people are saying on X or on the news. If they're fearing you out, I like to look at what people are actually doing. And what I see are right now $7 million of IREN calls bought. $7 million of IREN calls bought out of the money. I don't know how much this is for. Let's see, like $2 million of ASTS calls just bought out of the money, way out of the money, near term. I mean, and you said the space theme, and I know we're gonna get into that, but I mean, how can you get bearish when that's what's happening? People are buying the dip in size. Anyway, sorry, go on.
No, we should get into the space thing because that's the leader again today. Like it's been the leader all week, and I think that a lot of people are like maybe looking out for why that is. It's one word: SpaceX. Like I think what happened with SpaceX on that 2026 IPO, it is going to SpaceX will be the IPO of the decade. $1.5 trillion is what they're targeting. I can like promise you they're going to open at 2 trillion plus. I think the demand for that is substantial. I think the multiple is very full, but if you want to own the guardrails of the space economy that's multi-trillion dollars, this is how you do it. And I know like every company is just a ticker with a narrative. When you have Elon running this company with the space economy narrative, like it's going to be the hottest IPO potentially ever. I wouldn't be surprised if this is the hottest IPO ever. And I think that what's happening in the whole space like sector right now in the public sector is, I think the market's now forced to reprice what space infrastructure is worth. I think $1.5 potentially $2 trillion valuation on SpaceX tells everyone that launch, LEO connectivity, orbital infrastructure are going to be foundational platforms with massive durable demand that's tied to both sovereign government spend and also a commercial customers. So when the anchor of the entire ecosystem, aka SpaceX, is valued that highly, then companies like Rocket Lab, companies like AST Space Mobile suddenly screen as structurally undervalued because they participate in the same demand cycle that SpaceX is. So when SpaceX is commanding a 65 times 2026 sales, I don't know what their margins are at all, but the price to sales basic with growing 50+%, you have Rocket Lab as obviously the second player, but they're trading at half that multiple with the same growth. They're going to get a re-rating. It's the same demand pool that both companies are going after. And I can tell you this, like, although Trump and Elon they're chilling now, I think you got a glimpse of how easy it was for Elon to use SpaceX as a pawn on leverage. And I think that there's a massive national security component now with space that the US government, they can't just overly rely on one vendor. You need to diversify. So even if SpaceX is chef's kiss and everyone else is really good, but not elite, I think they're going to settle for really good because they need vendor expansion just so they don't be overly levered towards one vendor who has a history of going off the deep end every once in a while. So I don't know. I think the whole space thing, that is a theme in 2026. I'm going on TV a couple times today, and that is something I'm going to be talking about significantly is 2026 will be the year of space. Like, you got glimpses of it the past year, 2 years, but this is there's only a handful of names you can invest in the space economy. Only a handful. SpaceX clearly the king. Rocket Lab clearly the space logistics company in the future. You have ASTS as the American Tower of Space. I think these are, and you have other names like Planet Lab. You have Redwire. You have Fly. You have Black Sky. All these names, they're gonna be catching a bid because of a high tide resolve boat situation, and I just think that it's not going to go away anytime soon. And honestly, it's going to get much more validated when not validated, much more accelerated when you merge AI in space. I think that's what's been happening recently on data centers in space. You're seeing so many CEOs talk about this recently. Question for you, though, Logical. Do you think so? The whole economics of AI utilities, like the IREN, CIFRs, WULF, like etc., like NBIS, even to an extent, is the economics of running these data centers is why these names are catching major bids, because the economics is all that the hyperscalers care about, like how much they can do with the amount that they have so they can make an ROI on it. Do you think that the space conversation with data centers is becoming an anchor to this theme? Because now, if data centers start going into space, it eliminates the urgency almost for on Earth data centers with these players who are capitalizing on a moment, but who knows how long that moment is. But if space has become a reality, then maybe it's not the runway isn't as significant for these AI utility players. Let's just say that.
I mean, you're saying like if space data centers were to replace like the ones here that are doing the utilities, is that the idea?
No, not replace, but add on to the stack. So now the urgency of like there's so much demand and we have to do data centers like on Earth. Like we have to adopt not the riskier, but like maybe the external partnerships that we wouldn't have done a couple years ago. And now you add space as a different vessel on fulfilling these data centers, and now it becomes like a competitor almost, these AI utility names. Do you think that's what's happening?
I feel like it right now we have a concern of glut. I think you and I both believe that that's not necessarily true, at least not at this point in the race.
Yeah.
So we could use more data centers for sure at this point in time. But I do think that you have new entrants to the space makes it, I don't know, like we're already fighting down like on our margins. New entrant, which is bringing new supply. That means now you're competing with them. I don't know like how this ends up shaking out. I just don't, if I'm being totally honest, like from a physics standpoint, I don't really understand the space AI data center thing. I don't, can you explain how that works? Like, how does that work?
Well, no, it's solar.
I don't understand
It's
that.
essentially solar energy. Like there, I forgot like 30% increase in solar energy if you just put in space. That is essentially makes it a lot more power efficient. Also, the cooling. I think people underestimate how expensive the cooling element is on running these data centers. So that alone eliminates a lot of the costs of running data centers because you don't have to pay for that anymore, which then results in you don't need a battery. Like, why do you need a battery if it runs on solar and space? You don't have to worry about the cooling. It eliminates the necessity for paying up for these batteries. So I think that's kind of why it
Yeah, you're
makes,
saying from an energy standpoint, it makes way more sense, and
and
energy seems to be the
that's the
bottleneck.
that
That's a
is the
bottleneck.
bottleneck that'll only get worse too. And I
But
think
like,
that
how does it work? Like, how do you get it up there? Like, I don't understand. Like,
that's the
isn't it
that's the thing.
massive?
No, the medium-sized launches don't really exist besides SpaceX. That's why Rocket Lab with Neutron, like if they do it, which I think they will, that's a massive tailwind just on the data center theme because there's not enough launches for these data centers. Eventually, there will be as time goes on, but in the next 5 years, there really is not. So that's the hurdle for AI in space. But if Neutron can be that second vessel, which I think they will, that's a game changer. It's substantially a game changer.
Yeah, I see it, but yeah, this stuff just feels like super sci-fi to me. Like, I don't even understand. Like, I mean, I've worked on like crazy satellites and stuff in my past, so like, I understand how difficult and complicated a launch can be, especially a massive one. I feel like I would be very impressed by humans if we were pulling this off. I just don't
Oh, it won't. It
understand how
won't.
they would.
It won't happen by 2030. That's why I think that what's
Yeah, I
happening.
don't.
Yeah, well, that's why what's happening with IREN, CIFR, etc. Like this is FUD because that moment I was saying they're all capitalizing on Earth, they're going to be continuing doing that for the next couple years, up to 5 years potentially. And these companies are $10 billion doing deals that are worth billions, and they're going to start compounding. That's why they're going to get the re-rating. The issue is like when you have this bare FUD right now with Oracle's structure on data centers, space potentially accelerating. So now there's going to be the moment shrinking. That when you have a name like IREN, who's trying to become a CoreWeave and CIFR combined, like they're dreaming much more than what a typical AI utility name is, they're going to get punished. I think I don't know what they're at right now. Actually, they're probably they're down 6%. So like that's actually it's been a lagger recently, and I think it's because of this participant in the FUD. Like I also do believe that if you're bearish on OpenAI, there's like names that you can cap. Like I think going bearish on Oracle, going bearish on CoreWeave, going bearish on potentially IREN, like those are the names that people I think are kind of using as their play on being bearish on OpenAI. And I think that's where you're kind of seeing the price action recently as well, where the Sam Altman premium risk, let's just call it that, the names that are associated with them are the laggers, but the names that aren't, the Googles, even like the Metas,
Broadcom.
Broadcom, like they are all near all-time highs. I think the market's telling you something. Like again, like this is my gut of saying Sam Altman premium risk is being assigned, and it might be an anchor for a long time because they're experiencing code red themselves. Like they just called it out 2 weeks ago, and they're committing spend. Like this is significant, and the economics, like they're the worst. They have the worst economics for compute out there in the market. They just don't have the talents essentially to do to create like what Google does with TPUs, for example. Like they just don't have that. So I think that now like they haven't cared about that. So if economics are being a factor in these data center buildouts, now Sam Altman is like, oh shit. Like now it's not like easy money where I can just like brute force my way into the center of the AI economy. I actually have to be strategic with it, where I have to actually create an ROI. That's a totally different ball game on AI when you have to actually focus on efficient spend, not just spend, efficient spend. Very different. So I think that right now, I wouldn't be surprised if we don't hear too many OpenAI deals. I actually think that this morning, for example, you're going to hear like Disney is investing up to $1 billion in OpenAI. Let me pull it up recently, the exact specifics. So Disney is investing $1 billion in OpenAI and signing a 3-year deal that lets Sora generate short videos on over 200 Disney characters across Marvel, Pixar, and Star Wars. Why is Sam Altman doing this? Why is he giving it equity? He has to get creative on improving his quality, his eco, because he can't just brute force his way. He has to get some kind of ROI. Disney investing $1 billion essentially for them to let them use their products to improve OpenAI's products, aka Sora. You're going to see a lot more deals like this than Project Stargate type of deals, let's just say, for OpenAI. And I think that is what you want to see if you're an AI investor, because you don't want a bubble and you need to have actually some economics 101. But yeah, it's like you don't want to be associated with OpenAI right now. And I think that it's like right in your face about, like, there's a reason NVIDIA just announced a partnership with Anthropic a couple weeks ago. Jensen, he lives AI. He knows exactly what's happening in the AI economy before anyone else does. He sees the tainted lights that Sam Altman has now in the AI economy. How do you, like, NVIDIA has essentially been the mentor of OpenAI the whole time. Now they're like, we have to deleverage ourselves a bit. We need to kind of go towards OpenAI's competitors, because we have so much like compute that everyone else needs. We have to kind of diversify a bit to the ones that are actually not getting the scrutiny in the public eye. I mean, what's your take on that?
Yeah, I mean, it makes sense right now. I think we already had a crash out from Sam, was a few weeks ago on that podcast where, I thought it was pretty unprofessional. You're a guy who's running kind of like the industry. You're pushing forward
Arrogance,
the frontier
very
of AI.
arrogant. Yeah.
It's not even arrogant, it's defensive. And I'm sorry to say, but whenever you're that defensive about what are legitimate questions, I mean, dude, the guy who's talking to you runs a multi-billion-dollar fund. He's an investor in your company. He asked a very simple question about the unit economics and how you're going to be able to supply this spend. And your response didn't even answer the question. It didn't, he spazzed out and said, like, if you don't want your OpenAI shares, I'll find someone to buy them off you right now. And it's like, what? How is that your response? Like, these are legitimate threats. So I am just a little bit concerned about that. I don't know. Something's fishy about it. But here's what I can say is, like, look, OpenAI is ChatGPT, which is an LLM, and which is, AI agents, and there's a business model. But I mean, okay, so I have a question for you. Like, aren't LLMs just becoming a commodity?
Yeah, foundational models will be a commodity.
So that what do they have? I mean, what, they have one of the models. So what should Anthropic, with all these companies should be worth trillions of dollars because they all have their own commodity layer. Like, and now we have open source version of them. Like, I don't understand what's going on here from a business standpoint.
I think OpenAI will eventually be SaaS, in my opinion. Like, by SaaS, I mean they're gonna have horizontal SaaS layers, features. They're gonna have their own CRM. They're gonna have their own developer code, like a GitLab. Honestly, I think their software is going to go through a massive M&A spree in the next 2 years. It's going to be significant. And I called this out a couple weeks ago. Where 2026, 2027, you're going to see a massive amount of M&A for companies less than $15 billion, because that AI tsunami I've been saying for over a year is coming for everyone, and software is going to be the most vulnerable. If you can't prove to be a platform, you're not going to be a standalone in the new AI economy. And I think a lot of investors now realizing how difficult it is. You can't just say you're going to be a platform. You have to actually prove it with not just a narrative, like with the actual facts. And I think that you're seeing like Confluent getting acquired. That makes sense to me. Like, with managed services on an open source product is extremely difficult. Like, to sell, like, it really is extremely difficult in this new AI era, because why should we pay for your managed services when we can get your open source product, which is good enough, and layer our own AI tools on top of it to make sure it runs efficiently? Observability. The whole thing about the observability feature and software ecosystem is making sure you don't overspend on the cloud. Can AI just do that? Like, can I just create Datadog competing product without paying up for what Datadog's product is. I'm not saying Datadog's going to. Why do I have to do a managed service? Like, why do I have to pay up for a managed service? Then when your open source is 70% good enough, and I can just layer on top of my own internal AI tools, and it's free. I don't have to pay up for licensing. I don't have to pay for seat-based expenses. Like all that's what I'm talking about for the AI tsunami that's coming for this whole space. But so a lot of these software companies are going to prove that they're just features. What is perfect for these ecosystems? Buying features. It's the Salesforce business model. It's the business model that Palo Alto is doing right now. They can't organically grow their own platform. They're acquiring all these different cybersecurity companies that are just going to be a feature. CyberArk was the most recent one. So I think that you're going to see OpenAI kind of, this is my 2 cents. I have no evidence, no research backing this up. It's just from what I'm reading in the space. In order for them to kind of get past the commodity layer without solving AGI, because that's obviously the race that everyone's trying to go towards, but we're so far away from that. Like not even, it won't happen by 2030. I think it's going to be a decade plus, actually. I think they're going to have to kind of acquire these features, software features, and put it into their ecosystem because they have so many users. They have so many users they can leverage. And I think that their enterprise presence is maybe where they can flex their muscle a bit more. And I just think that if you have their own CRM, you have your own DevOps tools, if you have some kind of consumption model on the enterprise side, that's where they maybe can get priced accordingly. But I don't know, Anthropic, and to me, is a better investment. Like they are doing it the right way. And I think that that's why like they're going to be profitable like years before OpenAI is. Their growth is substantial. They're worth 300 bill. I think OpenAI is worth 500 bill. Which one would I rather invest in when Claude has a $1 billion ARR already, and they're going to be profitable within next year? I trust that management more because they're doing it the right way. They were supposed to be just this Bloomberg of LLMs, but they're actually morphing themselves much more. So I think that everyone knows that the coding in Anthropic is superior to everyone else. Like if you're a developer, a coder, like you go there. That is somewhat of a moat. I don't know. So to answer your question, it's long-winded, logical. I think that yes, it's all a commodity, but the first wave of tech disruption, you get a lot of users and accounts, and it's up to you to leverage yourself to become something more. Now it's up to them to do that. And I think that, who knows, like OpenAI can be an Adobe competitor. OpenAI can be CRM competitor. It could be all these soft SaaS competitors that maybe becomes a centralized marketplace of like this pawn shop of, in a way, like a SaaS pawn shop. That's a good expression of what OpenAI can be, of just piecing together a bunch of software features into one ecosystem. And there is, Sam Altman has an aura. He has an aura. You might hate him or love him. It's a polarizing one, but he can attract a lot of eyeballs, and that's something.
I guess, but once they start souring on him, it's hard to build that reputation back. I hear you on like the building. I think the key part of what you said is like the consumption based model of it, because we've seen that you need to be consumption based. You can't be seat based. If anything, we're going to have less and less engineers taking up seats, but we are going to have, more and more queries building, computation building, and all that stuff. So it makes sense. I mean, like if you think about it from like a, I don't know, like a business standpoint, SaaS standpoint, yeah. I mean, clearly you'd want like some sort of tools or whatever that you build on top of the LLM. The problem is though that there's enough open source LLMs, or there's going to be enough of your business where you're licensing out your LLM, where other people can build these things probably just as good as you, if not better. So the problem is SaaS world.
Well,
go ahead.
No, I was going to say, well, the issue though is I think memory is the moat in LLMs, and I think that that's kind of what OpenAI has. The ChatGPT has the best memory among everyone.
What do you mean by memory?
It knows, once you train it well enough, it kind of can memorize everything you preference before, everything that your style of like what you need from the answer. Like it just makes it's much more personalized. That's the memory component of LLMs. So like that's superior to everyone else. And I think that's what makes the stickiness almost in a way. Like so I think that's what they have going. That's why I meant by memory. Sorry to
To
interrupt
be
you, but
fair, no, I haven't really even used anything outside of ChatGPT, so I actually don't even know the
well,
differences between these
have you ever
LLMs.
used ChatGPT Premium?
I have ChatGPT Premium,
Oh,
yeah.
okay.
Why?
So
What
like,
about it?
no, I just like a lot of people like use ChatGPT that like my wife's friends, for example, like they don't love AI. I was like, well, have you ever paid for a premium AI? None of them have. So I was like, all right, well, what you haven't even tested the one that actually matters. Like the free version is just like it's bland. It's literally food with no seasoning. So like, are you gonna like that meal? Probably not. You're gonna need some seasoning on it to enjoy it. That's what the premium versions of LMs are.
But what's the difference? I mean, the reason why I got Premium is because I could only send so many photos to it a day, which is why I wanted more photos a day. What do you think about it is
The,
different?
the quality, it's the reasoning is
Oh,
powerful. It's
really?
just
It's a
yeah,
better
yeah.
model. Oh, I
Oh no,
didn't know
it's
that.
oh yeah, it's not watered down. It's just it's
It's
substantially
very
better.
good. Don't get me wrong. I have no issues with ChatGPT at all. I actually think it's improved my life tenfold. So in every way aspect, I have a health question, I'll ask it. I have a work question, I'll ask it. I have stock question, I'll ask it. I mean, it's
No,
made my
it's your
life very reasonable. Like in terms
oh
of stress, like I'm way
well
more capable now. Yeah, go ahead.
the memory component of it is like again like I have high cholesterol like anytime like will know I have high cholesterol now. I don't know if Gemini 3.0 would know that. I don't know if Grok would
So it
remember
stores all
that
that information and becomes more and more personalized to you. I
exactly. So
didn't
I
know
can
that.
yeah. So
I
that's
thought you had to go back to those chats to
no
specifically continue that thread.
most
Oh,
LMs you do. ChatGPT you
okay.
don't really. So like for me like is this
Oh
meal
shoot.
gonna affect my cholesterol? Like I say that all the time to it, and it's just like it tells me because it remembers that it actually sources back to well you have high specific this and cholesterol, so like it might affect. I'm like dude, that's agentic AI right there. So I was like, agentic AI we didn't talk about. That's kind of where the reasoning and memory kind of really
Mhm.
factor in, and I think they're going to be able. They're going to be the best LLM out there. I just don't know what valuation to put. I also think that I don't think Anthropic and OpenAI combined should be $1 trillion. Let's just say that. I think that's excessive. You're
Mhm.
seeing how Oracle could even sustain $1 trillion valuation more than a month. Like it's very difficult. Uh,
Oh sure, yeah.
I mean, anyway, so let's talk Adobe actually, because you're a value investor in a way. Like
Yeah.
Adobe, dude, Adobe's like what 14 times earnings. Like they're still growing double digits. Their EPS is outgrowing their revenue. Like there's again, the reason I say that, guys, is to tell on if you're Gen AI vulnerable is essentially if it's the opposite, like you're just margins are eroding. You're maintaining your in order to maintain your top line. That's pricing power. That's essentially what that is. We're not getting that with Adobe, but the narrative obviously is so heavy. Gen AI vulnerable, and I don't know what they have to do to shake it off. But like, have you ever looked into Adobe as a potential candidate for your whole portfolio?
Absolutely not, man. It seems like the one thing, and I know they keep saying they're implementing AI and whatnot, but like I feel like it's the first thing to go with AI. It's gonna be the thing that AI eats. I just don't see it. Like, and maybe I'm wrong, and maybe I was kind of wrong on not kind of wrong. I was definitely wrong on Google, but I still am like a long term search bear. So, and that's how they make most of their money. So I don't know. We'll see long term how I end up on that call, but clearly they've built other business lines that are going to carry it forward. But still, Google, for example, I don't want to make this about Google, but they make a lot of their money from search. And I just, if everyone's, but then again, you're going to start having like ads on, maybe Gemini, but what are the user numbers? I feel like ChatGPT is definitely like winning in the user numbers. Most people still use ChatGPT. Most normies, like you just said, your friends or your wife's friends, they use ChatGPT Basic. Um, I don't think people are like they don't even know about premium and they don't know about the benefits. And then they,
Yeah.
what they're gonna be like, oh well, I just checked Claude, Sonnet, and I just checked, like, come on, dude. Like people are ChatGPT is fine. I still don't know what the future looks like for Google search. What I can say is, like Adobe, I'm generally like, I don't get it. Like, what are they gonna do that AI won't be able to just recreate? I'm just, look what you can do now in already 2 years. What's changed in video editing, right? Like you've seen Sora. Like you can just
Mm-hmm.
like say anything and it'll do it. It's not that hard to edit a video anymore. So it'll just keep getting better. I don't know what's the draw to Adobe. What we need humans to do it? Why? Why do we need that? Just have the just constantly fine tune it with some sort of AI software. I don't know. I think it's like people who are long Adobe because it's cheap. It's like, well, we've seen cheap get cheaper, and I feel like it's just contrarianism just for the sake of it. So that's my take. I just don't see the whole
Well,
for Adobe.
well, you know what it is? I think Meta in 2022 really fucked up a lot of people. What I mean by that is
I could see that. Yeah, no,
you,
totally.
you see a blue chip growth company or software, whatever you want to call it, like just be everyone wants it, and all of a sudden like they tank and it V shapes to something like we all knew what they were. They just had a brief moment of lapse or whatever you want to call it. So everyone now always tries to reference Meta 2022. You saw United Healthcare, UNH. Like people were trying to compare that to Meta in 2022, and it's just so different. Like UNH is CMS is the reason for that issue. It's not anything on their internal strategy. It's like, listen, the government decided to pay us less money than what we are normally accustomed to, and there's nothing we can do about that. Like they assigned a specific revenue for coding and RAF scores, and they used to be $5. Now they're just going to give us $4, 20% reduction. I can't do anything. We can't do anything about that. We just have to live with that reality. Meta was different. Meta was just pumping billions in reality labs or in AR and VR, and that was not going to have any kind of ROI in the immediate. It's something building the metaverse that nobody really wants, and that was anchoring shareholder value. And he decided, okay, I'm going to care more about shareholders, and that's why V-shaped. It was literally user error. You can say it was Zuck specific. So UNH is not 2022 Meta. Adobe is also not 2022 Meta because there is a Gen AI risk. I don't care if you are bullish or bearish on the name. Like I think that bearish is a little too excessive for Adobe, but you can't be ignorant enough to not see that there is Gen AI risk. Just look at Sora, for example. Like just OpenAI is going to be a competitor to Adobe. Who knows how much of a competitor? So right now, when you're looking at their fundamentals, which I am right now, 15 times earnings is what they're trading at. They have a Rule 40 score of 50. That's like you're not seeing it, the proof in the pudding at all right now. So that's where I don't think it's gonna be a V shape like Meta. But do I think that Adobe can hit 500 and just be a cash compounder going forward? Yeah, like that's where I think the real tension in the Adobe story clearly hasn't changed from yesterday's earnings report. Like I think over a long horizon, I agree with you, Logical, that generative tools will absolutely compress parts of the value chain that Adobe has historically owned. You can't, if you're an Adobe bull, you can't deny that. And I think it's unreasonable if you deny that. So it would be a mistake to size your investment in Adobe like a bulletproof secular winner that can never be dislodged. Let's just say that. So, but at the same time, I do think the current reports yesterday reinforced that the worst case AI narrative is still not showing up in the actual numbers. It's too soon to declare like an AI victory for Adobe, but like I don't see any proof of that vulnerability. Like right now, like revenue grew. I'm looking at my notes for this right now. So revenue grew 10%. Subscription revenue grew faster than that. Digital media ARR expanded more than 11%, and RPO grew 13%. So that's where I want to harness on, because revenue grew 10%. Subscription grew faster, and RPO grew even faster. So RPO growth right now outpacing revenue is, to me, one of the cleanest signals that customers are not churning out to upstart AI tools yet, but are instead actually signing larger and longer commitments. So that fact right there, until that switches, that's not a franchise under an immediate AI attack. However, when you're in a once in a lifetime super cycle like we are right now, AI, space, electrification, allocating your soldiers to a vulnerable theme that Adobe operates in is risky, because you don't get AI every 5 years, like a type of theme or super cycle like AI. You just don't. The last time was 25 years ago in internet. And I've been adamant from the get-go, this is much bigger than internet. Internet was product oriented. There was no monetization tail that can be identified right when it got launched. Everyone and their mother knows how to monetize AI right now. Their issue is they don't have the compute. Like that's a frustration. Imagine being a CRO of a company, like telling like get as much compute as possible because we can 10x our revenue if you get what we need. Essentially, 10x is an exaggeration. It's just everyone's compute constrained. That's a difference. So I do think that right now, like, do you want to allocate your resources towards a potential V shape on a Gen AI vulnerable tool? I don't think it's going to replace it completely, but it's just going to be a value play potentially forever. I don't think it will ever get traded. I really don't think Adobe will ever be valued at 30 times earnings ever again. Let's just say that. I think it's going to be a very steady cash compounder. I think I wouldn't be surprised if 15 to 20 is just that's where they're always going to be. And that's perfectly fine. Like that really is perfectly fine because they buy back shares, they print cash. Like they're printing 10 billion a year. Like that's incremental. Like that is just, they're going to buy back shares. They're going to do all that strategy. But listen, PayPal, just look at PayPal. That has been the story for PayPal. For nobody wants to own a payment services company anymore. It's a feature. Like it's a commoditized space. Venmo was first mover. They messed that up. They didn't make that into much bigger than it could be. And PayPal is just always going to be criminally undervalued, and it's going to look that way. Adobe might follow that, and I think you have to be conscious that this is not going to be a meta 2022 situation. Doesn't mean it's going to be terminal, but it just might be a slow, steady compounder type of thing, and that's fine. I don't know. That's my 2 cents on that for Adobe. I'm looking at the market now. It's kind of surprising. It's staying steady. So I'm looking at Qs. People confuse choppiness with volatility. Like that's the thing. Like I think there's a real thing called digestion. And I think right now, if you look at the QQQ, like logical, I know you like charts a lot. Where do they bounce perfectly today? They're 21-day EMA. They're not breaking that. This is just choppiness. This is not anything structurally breaking.
Yep, exactly. I mean, dude, we just had a pullback. I don't know. Everybody wants to like, I explained probably on our last stream last week, saying we got a 5% correction. You got a head and shoulders on the S&P. You broke down. You broke below the neck line. You had this extreme reversal on the NVIDIA news. You slice through the 50-day. You tap the 100-day. Big volume comes into buy. Within the next few days, I showed you the volume on that, what we thought would be a light volume week. Within 4 sessions, we reclaimed the 50-day. That's a V-shaped recovery. That's a lockout rally. Those happen in strong markets that continue to the upside. So to me, and the fact that we never even pulled back to the 50-day to retest it, like today you get a pullback to the 21 EMA, perfect. You buy that because we've been looking for a retrace at all of this crazy run. I mean, look, I'm looking at my chart right now for, let's see. I'm looking and seeing how much we've bounced. The Qs bounced 8.3% from the lows. That's a big rally. A major index bounced 8.3% in like a less than 2 week time frame. We didn't get a single pullback in any of that. So we get a little bit of a pullback today, which is really healthy. I don't know. I just think it's you know what I mean. I think it's fine. So yeah, I mean, but I'm more looking at other things like IWM and XPI. Taylor, actually, are you able to? Can I share my screen? Let me see if I can share it. Hold on. Let me put this on. Let me know if you can throw this up. All right, perfect. So, okay, I want to show you guys what we're looking at here, okay? Here's SPY. Here is kind of, we came from here and we went all the way to yesterday's highs of 6%, okay? It tapped the 9 EMA, hasn't even given this back. I thought, look, 1, 2, 3, you're already above the 50-day. That's the orange line. Sorry, I use a lot of lines, but the orange line is a 50-day. 1, 2, 3, already reclaimed it. That's a V shape if I've ever seen one. Then you look at Qs, right? So here's the Qs, what we were just talking about, the 21 EMA tap. I mean, look at this thing, okay? from the bottom to the highs yesterday, 8.3% run. And now you get this kind of 1% pullback, tap the 21 EMA to the penny. And I already said, I don't care about Oracle. It doesn't mean anything to me. It doesn't mean anything to this market. I really don't think so. We were already, data center fear happened. Why? Because names like IREN fell, like 50%, So we already had this move. People are scared about the move. It already happened. Here's Oracle. Okay, here's Oracle. This is what we're talking about today. People are talking about this drop from, here to where we fell 16%. Okay. It's a big drop for a large cap, don't get me wrong. But we already, coming into yesterday, we had already fallen at 1.46% in like less than, 2 months. So it's like people are scared of what's going to happen, but what's already happened has already happened. So I know it's a weird way to say it, but okay, in the meantime, look at RSP. RSP, new all-time high today. I just want everyone to look at this chart. This is what's happening in the market. This is what the median stock is doing. Forget the market cap weighted. Obviously, an Oracle is large. If it has a minus 16% day, it's going to drag down the S&P, but it's not going to drag down the RSP. RSP, new all-time high yesterday, new all-time high today. The median stock is doing great. This is breadth expansion. You've been wanting to see the baton passed. Look at this. This looks just flat and consolidating. RSP breaking out. Very bullish for stocks. Here's IWM. Didn't make a new all-time high today. It almost did, but it made one yesterday and it almost made one today, and it pushed higher today. So here again is the SPY. Here's the QQQ, right? It's red on the RSP is up on the day. So it really now we're starting to get into a stock pickers market of like, what do you own, right? And let's look at XBI. XBI didn't make a new high, but look at this thing. Is this bearish to you? The last time the XBI did something like this was 2021. So here we are, and we're just dragging along. It's like it's insane strength. So yeah, I mean, SPY might be choppy. Look at Amazon; it'll tell you it's choppy. It's gone nowhere for a year. This is weighing on the market cap. What used to be a tailwind in 2023, where all the mega caps led out of that, now they're consolidating, and with it, they're forcing the S&P. Here's Meta. Meta also breaking down a little bit here, getting rejected at the 90 EMA, now overhead resistance. I cut my Meta too. I cut all my large caps. I know you're gonna hate this. Here's Melly. Melly lost support, and I'm not saying I'm not bullish Melly, but dude, look at this volume on the sell yesterday. Big time sell. So market is telling you what they want you to own. C Limited, another great e-commerce name, international space, fine, but quality compounder, just making new lows. This is what's happening. But the average small caps are actually winning. I know I've called like Evolve the mini Axon. I know you push back against that. That's fine, but you know what I mean. It's in the security space. Look at this. And just climbing. Just looks really good. We'll see how it shakes out. But yeah, I mean, there's just a lot of these small caps that are doing really, really well. I'm trying to think about other ones. I mean, look at DigitalOcean. You own that one. Look at this. This is a small cap. I mean, mid cap, whatever you want to call it. But this thing has a low, look at this volume today. No volume, minus 5%. Okay, so it's hurting tech. I actually added some today because that's a great pullback right down to the 9 EMA.
Well, let's talk DigitalOcean a little because that is. I'm going on TV later today to talk about my bull case on DigitalOcean.
Excellent.
I'm telling you, like, this is ever since the 20s. I was just like, I feel like the lone wolf. I was the only one. You were
the only one bullish.
Only one. So I feel like, what am I saying? Like, I'm like, I know everyone thinks this is AWS like competing products. I was like, that's the issue. Like sometimes when you're so on the opposite end of like what people are saying, like sometimes you like, maybe I'm wrong. Find your conviction that just what you own and why you own it. This name, like if you list, I've listened to every single thing that Patty has talked. This CEO, they've been sending breadcrumbs that they're going to be growing 2027 at 20% top line. So when you look at what the estimates are, he said it again last earnings call. He was like, in your face, like we're actually going to grow this. So like that's why it got massive re-rating. You saw the gap up. Right now, whoa, I didn't see this before.
What
The
happened?
sell side estimates are caught up now.
Hmm.
Wow, I did not see that. So they all got re-rated higher. 27 is now growing at 19.4%. So I think that's why it's catching a major bid, because they're seeing sell side analysts have bullish notes now all of a sudden that factor this in. So you have a company now growing top line 19% with 39% EBITDA margins. Okay, so this is not, it's just use free cash flow. They qualify now for the Rule 40 free cash flow multiple of 40. 20% free cash flow margins, growing the top line 20%. So what's their valuation right now? It's at 25 times free cash flow. It's at 15 times EBITDA. My rule of thumb always is if you qualify for 40 times, this Rule 40 score, you deserve a 35 to 40-ish multiple, because it just depends on the mode, etc. So this right now, it could be $100 stock in my opinion and still be fairly valued. I think that's why my thought has always been, even in the 20s, this is a 5-bagger, because this should be $100 stock if management actually delivers. And I think now you're seeing signs of sell side believing it. You're seeing investors believe it, and now it's getting re-rated. But I think it has a long way to go. They have to see continued reacceleration next earnings cycle. But I think the way it's heading and trending, I think the next earnings cycle will be the next catalyst for that next leg, because it shows that it's actually realistic and it's going to probably catch that run. And once you get into the 80s and it's still undervalued, that $100 price, it's a psychological magnet. I don't care what anyone says. It's a psych level that gets magnetized. So I love that you're in it. I think this is a $100 stock. I've been very advocate. I've actually haven't sold. Top 5 position of mine. So I'm talking my book. But yeah.
Yeah, no, I'm a big fan of this. I think it makes it makes a ton of sense. The stock is pretty cheap. It fits the criteria that we like in, software stocks, where they're more of a platform. So there's a lot of opportunity in this market, but you have to be, another one that I traded this week was Frog. I actually cut the position, but look, what I was just trying to get to though is like, agree with you on DigitalOcean. I'm still long DigitalOcean. I have not sold a share. I've been buying more actually. But what I wanted to show with some of these charts is that there are stocks that look like this. There are stocks that look like this. There are stocks that are at their highs. There are stocks like Google consolidating at the highs. There are stocks like this, and there's a lot of stocks that look like the ones that I showed before, like Meta, going lower, Melly going lower, and obviously these things, fundamentally speaking, are gonna do well long term. Meta's an amazing business. Melly's an incredible business. Owns Latin America. Not saying that. I am just simply saying that while the S&P is consolidating, the market cap weighted, the median stock is making new all-time highs. I'm saying there's a ton of opportunity in this market, but it's not the same way. You have to think differently in this market about which stocks are working and which ones are taking a breather, consolidating. You know what I mean? Like I love these companies. I love these businesses. I'm just saying the stocks right now, they're not the ones that are catching the bid. Yesterday, S&P failed to make a new all-time high when everything was rallying. IWM, new all-time high. RSP, new all-time high. That's what I'm trying to say, is that like there is opportunity in this market. It just looks different than 2 months ago, a year ago, etc. So that's all I'm saying. Is there a rotation?
That's also the beauty of end of the year. 2026 will have brand new winners and leaders.
Yep.
There's something about it. Like every year, it's just new leaders get created. I think 24 was super micro and like those kind of companies. I think you got the first wave of, I don't care if your product's a commodity. If you can be the first mover in this AI theme, you're going to catch a major bid. This year, space, memory, AI memory. You're seeing AI network, some names. You're seeing AI. Next year, we're going to be the names. I agree with logical. I don't know if he's still on this boat, but I think biotech's going to be huge. I think that's going to be the big year for biotech.
I think I probably have like 90% exposure.
Yeah.
To
so I think biotech is very real and very big. I think space will continue, but it's also going to hit the next leg on like, holy moly, the amount of spend that's going to happen. It's not in 5 years. It actually might be in the next 2 or 3 years. And then the next theme is you might not see it right now. I think emerging markets is going to be a major theme. I really do. Latin America, I'm very bullish on. And I think that obviously Mali is my top 3 position. I think the digital product explosion that you're going to see in these not underserved, but like these very new economies is going to get accelerated because of AI. And I don't know when that inflection period will be. I really do believe the way it's been reacting this year, it's setting up for overperformance next year. So I think that my 3 themes, I'm curious what your themes are for 26. We can like continue talking next week about this because we're over our hour, but I think it's biotech, space, and emerging markets is like the 3 themes in 26.
I would love for emerging markets. I only own right now from the emerging markets is our Jumia, our baby Jumia. You saw that?
We didn't talk about that. Yeah, we should have talked about that.
You saw the
Black Friday deal. Yeah.
Bro, 45% GMV growth in Nigeria. This is
growth
a real business
too. Yeah.
I keep adding, honestly. I keep adding. It's consolidating here at the highs. It's right at the 6 EMA. This thing looks beautiful. So I like that inflection in the story. It's a small cap. I think small caps work. I would love for EM to work because I love Mercado Libre. I love C Limited. I love Coupang. I love Nubank. There's a lot of really good businesses, but like besides Nubank, they're all kind of in no man's land right now. So I'd like to see those kind of like show some strength, buyers come in, and that would confirm what we want. Until I'm just look. Here's the thing. I'm actually like I know I come off as a trader to many people. The truth is that I just use it as guardrails. It just is like the filter that allows me to take a position or not. If there's momentum in the stock, then I will buy it. I love the business. I know more businesses than probably most people. Like, you know, you're obviously a savant in this category, but you know, I like to think of myself as I know like hundreds of businesses and I know them very well. So I know already my opportunity set from a fundamental standpoint, but I need to see the technicals come in so that I can go along the stock. And so as much information as I can use to make a profitable trade, that's what I do. Mm-hmm. So, you know, with the EM, I think the opportunity set is there, but the technicals have yet to show up. Like the buying has yet to show up. Well, so I would like that to confirm it.
Do you think rate cuts is what's anchoring it a bit?
I mean, the thing is though, like, I mean, I guess that would make it more like pro-US growth maybe, but like, no, man, cheaper dollar. I mean, look, when the US works, everything works. So it's like, because we're going to be consuming more, we're going to be taking more, people's exports are going to go up. So like, I don't know, maybe it's like the reversal of the tariffs. Well,
it's because maybe C Limited and Mercado Libre both tanking the way they've been. It's very separate regions. So it makes me feel like it has to feel like US dollar, or not US dollar, but like rate cut oriented.
You know, I was just listening to a podcast though, and it said like European value is actually outperforming the S&P. So there are pockets of, you know, but that's not emerging. That's developed country.
What's European value? You think it's like the designers like clothes? I mean, that kind of stuff?
I have no clue because I was listening to Compound and Friends, and they just said, I don't know. I'd probably have to look up like what that ETF is that captures them. Maybe I used to own one. I forgot what it's called. I don't want to get into that now, but maybe that's just developed countries.
ASML is killing it this year. What's the other one? ADBE is doing well, I think, as well. It's like there's definitely I can believe that.
But again, that's developed country, just like the U.S. Emerging markets is it's a developing, right? So like, you know, so we'll see. I hope EM picks up. I really do think it can be a global like boom. So hopefully everything starts picking up. Biotech, obviously, it's just showing me in the charts. It's showing me in the fundamentals. It's just making a lot of sense to me. It clicks. I think small cap tech is going to look really good. I think small caps are going to look really good. You need to be able to find the winners in small caps. Did you see this AAOI? Did you see they had
what
Applied
do they do?
Optoelectronics. They do like data center related hardware. And they had, let me try to find this news from yesterday. Major hyperscaler order yesterday. You might be interested in this one, dude. Yeah, huge volume order. That's, I think, why the stock has been ripping. Someone was buying like $55 out of the money calls for June. Yeah, sees, you know, 400G AI data center and
It's a
400G orders.
networking play. 400G
Yeah,
transceivers. I don't know.
dude, somebody was buying like $1 million worth of $55 calls when this thing was trading at 29. Now this thing's already run a little bit. I'm up like 20% on this position. Oh my God. Yeah, it's 35. Crazy. I mean, in a couple days. So something was happening. I saw the analyst notes saying they were expecting a big order. It actually was, wasn't sell the news. It ran into that news and it didn't really pop on it. So it already priced in that news ahead of time. But clearly something's happening here.
So my issue again, this is me live looking into it. So this is, you guys can see how I view a brand new name. I've never heard of it before. Cyclical optics. Like it looks like that's what they are right now. It feels like they're trying to turn into something bigger because that's what everyone is in data center theme. That is Broadcom's backyard. I also think that's Coherent's backyard as well.
Yes.
So it is. Okay. So it feels like maybe they benefit on high tide resolved boats. And I saw they have an Amazon multi-year contract. So maybe that's just like they're just catching the leftovers essentially, that whatever sub 1% market share is do substantial for this small cap.
Yeah, it's a $2 billion business, you know?
So I think that, and a name like AAOI, I have to look into if they actually have a mo. It might be like a capitalizing on a moment, not an actual long-term
Could very
compounder.
well be.
Yeah.
Could very well be. I'm in for a trade. I just want to have more tech exposure, but I wanted to specifically have small cap tech exposure because you're seeing it in IWM. You're seeing it that the large cap tech is not catching a bid. So I wanted to just double down on some of my plays like the Digital Oceans and this AAOI, which I found
there's a reason though for that, because like 50% of the data center build out spend is large cap tech, like these hyperscalers. So like if that is a bearish narrative, they're not going to catch a bid.
But then those hyperscalers are spending money with an AAOI. You know what I mean? So they're the ones benefiting from that spend from the large cap. So what is one man's trash is another man's treasure, basically, So
yeah,
I don't think that's the right use of that, but you know what I mean.
So I'm seeing one comment. I want to interact more with the comments. eVTOL.
Sure.
As a theme for 26?
You'd probably know better than me, man. I have no clue.
So I actually don't think this is at the current valuation right now. I'm bullish in this theme. I think Joby is, call it the test of the skies if you want. I think Archer is trying to target the space in a much more capex light route. So I think it's more of an immediate, like short-term juice of the space. I don't think you can go anywhere. Like it's not a theme for next year. I think I get the new age defense lens of like maybe Above the Skies is going to catch a bid. And these are two names that have a duopoly in it. But like when Joby's at a $14 billion market cap and they are going to be, burning $700 million a year for the next 5 years. And they have, all right, so they're burning 700 million every year. Let's just say that. Let's see how much cash they have on hand. 975 million. You're going to get diluted minimum times once a year. And it's probably going to be a 5 to 10% dilution every single year. There might be some years you do a couple. If this theme catches the bid, what's going to be the tailwind for that? Because there's going to be no margin expansion. It's going to be just dilution. I think Joby under 5 that made sense to me. A couple $1 billion valuation on some theme that's going to be inevitable, that's going to be substantial, is worth a bet because that it's a first mover. And I think that the market will probably carry it to a certain valuation. But at 15 billion, you have to ask yourself, like, what makes this a $50 billion market cap? I think at that level, when they're, let's see what the margins are supposed to be, like in the low 30, high 20s. It's not a scalable model in a way because like they're trying to become the Uber of the skies as well. Acquired Blade. I think you used to own Blade Logical. So like I think it is a real theme. I think this theme is actually going to be a part of our reality for the next 2 years. I would not be surprised if it just literally doesn't move. And that's the issue in this opportunity cost. I think Archer is going to be the host of the Olympics in 28 in LA. I think they have that partnership. They acquired the Hawthorne airports as well, which has a surf air mobility angle to it, which is interesting. But what's the tail end to catch a re-rating on this theme when it already re-rated? on multiple expansion. Maybe if rate cuts get so significant next year, like if we actually get 5 or 6 rate cuts next year, that these like low profitable companies and exciting themes will catch another bid. That might be the case, but like I don't know. It's on my watch list. I don't know either names anymore. It's on my watch list. It's just I don't know. I'm allocating my resources towards like more near-term monetization. Let's just say that. I don't know. What's your you don't have a thought on this space. So
I mean, I think it's too speculative for me. Like, let's be real. What has happened since October? From June, July to October, you had all the speculative stocks run. They were all 5, 10x, crazy runs. Now they're all down 50%. That's okay. 50% is quite a correction, though. I haven't looked at Joby specifically, so I don't know. Let me see. What is it doing?
It's holding up really well because Joby's doing the right way. Joby is doing exactly what Tesla did at the time. They want to own the end-to-end.
So it's down 30% from its highs, okay, which is not bad.
Look at Archer though.
What the run did. Yeah, I bet Archer's uglier, huh?
It's much more. Yeah.
Well, yeah. So about like 50%. Look, here's the thing. Again, I use technicals as a guardrail, and what I can tell you is that the speculative stocks, a lot of these money losers, they're not catching bids right now. The things that are going to catch bids are more of these value-oriented, free cash flow flowing. That's been the regime change right now. So I don't think eVTOL fits in that. I think it fits in the speculative bucket that gets that kind of, weak bounce right now. Maybe rolls back over. I don't even think it's too bold to say a lot of these speculative stocks, I'm not talking about Joby specifically. There are going to be exceptions to the rule. But as a group, I wouldn't be surprised if the speculative stocks have already seen their highs for the cycle. That is my thesis. So, I think long term, you hold these spec stocks, great. You didn't sell the top. Now you got to hold or decide what to do with that position, fine. But to expect 5, 10x returns every year is unlikely. Long term, maybe you get a 100 bagger. I don't know. But these things are going to have ups and downs, major 10x ups, 50% downs. It's going to happen 10 times on your way to become a 100 bagger, right? Like, sorry, you were saying?
No, I was going to say, like, there's nothing wrong with a 1% allocation if you're bullish on the theme. That's the thing. Like, for me, the reason I don't is because I'm in some speculative names. Like, I'm really bullish on CIFR and IREN in that theme. I'm still doing my research to see if it's more than just capitalizing on a moment. I own a decent part of my growth portfolio on those names. So like that's kind of my speculative area where like I don't want to get too speculative because my portfolio is up 400% past 2 years. Like I need to protect it a bit more. And I'm allocating my resources towards more guardrails like what Logical does where I can't just like let's just say 26 is brutal. It's a midterm year. Like there's who knows, like something breaks. Like you just don't know when the black swan occurs. Like I really don't want to experience a really down year after the performance we've had the past couple of years. Like I need to perform protected a bit. So like that's my thoughts on that. We are way over though, but this is I think we need to do this more than once a week, but we'll see. I think December's a little dead month, so I think maybe we'll see next year how that goes.
Yeah, let's definitely do. We're definitely on the books for next week. So hopefully we'll try to do same time, same day. And then man, we're gonna try to shift over to YouTube because we've noticed a lot of issues on X. I think people were just telling me that today was okay, but last week's was very unstable. So hopefully we'll get more moving towards YouTube. I think that'll be a little bit cleaner. But yeah, so look forward to that. We'll try to put up a preview link before next time, and we'll get it all scheduled and stuff. So. I appreciate everybody tuning in. This is always fun. I love talking to Shai. He's a good friend of mine, so always enjoy these. Thank you all for joining. Shai, any last words?
Do the work right now. The market's not going to move much. It's down 1.2%, but it's very controlled, and I just think that we're not going to really the VIX. Let's just say this: VIX won't hit a 20 handle until next year. I don't think it's going to be volatile the rest of the year. So enjoy the time off, rest, do the work, research. So. You enter the year prepared of what you actually want to own and just monitor it and see when you get some entries because opportunity costs are a very real thing. That's kind of the theme of this episode a bit. So when the moment strikes, capitalize on it and you'll be prepared because you did the research.
Good point. Opportunity cost, very important. Find cash flowing businesses, be able to find some value for it. That's what the market is telling you. Otherwise, I think this is all good. Yeah.
And this is coming from a Tesla, Palantir shareholder, Cloudflare share, like all the expensive stocks. But like, I'm not committing my new capital towards those names. Anyway, see you guys next week. Enjoyed having you
Cheers.
here.